you're in. Today's training is an interesting one that you can definitely use to add value to your transactions, to add value to your job as a mortgage loan originator, basically to differentiate yourself from the masses. There's a lot of people out there with MLO licenses, but not a lot of people adding value to the transactions. So, here, all right. So let's get right into mastering credit simulations and rapid rescores. So, what exactly is a credit simulator, right? A credit simulator is a tool that allows the MLO or the borrower to simulate different credit scenarios and generates a simulated credit score. This is a great tool to use. Just so that you all know, at the mortgage calculator, included with whatever credit report we pull, is a free score navigator credit simulation, right? So, uh, what exactly is Score Navigator? And actually, let me back up a second and let me explain the importance of credit simulations, not only to add value, to for you to add value to the transaction, but also you never know when something's going to happen and you may need a couple of extra points in the credit score, maybe to qualify for a better program or just to qualify at all. The file gets underwritten, the income drops, for example, and now you need a higher credit score to maintain your approval, right? Because now the DTI is higher, right? So higher DTI, if you're doing automated underwriting, it's going to look at the credit score and either approve you or not for that higher LTV loan. For example, if you want to get that 95% LTV, and you have a 48% DTI, you're going to need a good credit score, right? You're going to need 700 or above. So, you may have thought the DTI was good, right? But now all of a sudden they hit you with, hey, they cut your income over time's not what you thought it was. And now all of a sudden your borrower is not qualifying for that high DTI loan because their credit score is below a 700. So it's always a good idea to explore credit simulations in the beginning of the process with the borrower once you have the credit report. Identify opportunities and see if it may be something that the borrower wants to participate in. And then you, as the mortgage loan originator, obviously have to give the important points of having the highest credit score possible. It's not the first time that I've seen a deal fall through exactly for the reason that I stated, and no credit simulation was ever attempted in the beginning. And then all of a sudden, they want to do a credit simulation and a rapid rescore with 10 days left to close because of the income that got dropped, right? So, don't wait for the last minute. I would keep it as a best practice to do it. It's included in the credit reports, like I stated. You just have to know how to use the tool. So, Score Navigator is the credit simulation tool that we have. Score Navigator has a couple of different tools within it, right? You have the money simulator, where in the money simulator, you can enter how much money the borrower has to pay down on debt. And then the system will tell you what needs to be done with that amount of money. What's the best thing that can be done, right? So it's an algorithm. So, for example, borrower has $3,000 to pay down debt. Okay, you put $3,000 they have available. The program gets to work, and it basically lets you know, okay, with the $3,000, this is the best case scenario for the borrower. So that's one of the credit simulators that we have within Score Navigator. The other one, another one, not the other one, another one is Target Score Simulator. Now, if you all remember, we used to have a couple other systems before. One was Wayfinder, and the other one was What If. So the Target Score Simulator is the Wayfinder version where you basically state what is the score that you're targeting, and the system calculates what needs to be done to reach that score, if it's even possible to reach that score. So it basically provides the most efficient path to reach the desired target score goal by utilizing the fewest number of accounts. The results that you're going to receive. Now, this is pretty cool here now. The results you're going to receive will include the estimated credit score increase, the cost to the borrower for following the recommendations, the maximum achievable score, and this is the cool one, and the best estimated day of the month to pull the credit. Believe it or not, it does matter. Obviously, the system is going to calculate, is going to look when the accounts cycle, right? So that the credit is pulled when the payments are made, right? Now, another tool is the Smart Score Simulator, which is a manual simulator. This is similar to the old What If credit simulator that we used to have. This is one of my favorites because with this one, you can actually play around with the balances, play around with the accounts to see what happens, right? This is the true, real interesting one because, for example, you can change the balances to see what happens to the credit score in different accounts because you all know when the balances are all loaded up to the close to the limit, it's going to affect the credit score, right? So you definitely want to bring down those balances. Now, one thing about balances I am going to make note of is that the only balances that are going to affect your credit score are going to be revolving credit cards, not installment balances, right? Installment loans, actually, if an installment loan is paid off and the account is closed, it can actually reduce your credit score. So never tell your borrowers to, oh, why don't you finish paying off that car, or why don't you finish paying off that personal loan that's an installment loan, because you may actually decrease their credit score because you're going to increase the credit utilization, right? Credit utilization is what we're talking about here, the balances. The lower the credit utilization, the higher the credit score. If you eliminate an installment account of $5,000, you just eliminated $5,000 of available limit, and the borrower still has the same overall balances on their other accounts. What's going to happen is their credit score is going to drop because the utilization has increased. So in the Smart Score Simulator, we can change balances. We can delete an authorized user on good accounts to see what happens, or on bad accounts. I mean, a lot of times you see an authorized user account that the borrower is on and it's maxed out. Eliminate that account. Or you see an authorized user account that has a derogatory on it. Eliminate that account. But you can, again, check on it in the system to delete it and see what would happen to the credit score if you were to delete that account. Now, another option is to remove disputes, right? And see what happens, because sometimes, you're doing a DU and it says remove this dispute to try to get the automated approval. But then if you go and you click to remove the dispute, all of a sudden the credit score drops 40 or 50 points. So at that point, you may not want to remove the dispute, and you may actually want to go with the manual underwrite route and keep the credit score where it is, right? You don't want to Again, removing a dispute is a double-edged sword. Now you can also click to remove a late payment to see what happens to the credit score in case the borrower can somehow figure out some kind of documentation to get that late payment removed via a rapid rescore. You can see what would happen to the credit score if the late payment was removed. Smart Score Simulator also lets you see the best day to pull credit, and it also lets you see the best estimated date to pull credit. Right? They sound the same, but they're different components there. Now, the other tool, which I think is sort of blocked out there in the bottom there, is the Mortgage Action Plan MAP. The Mortgage Action Plan provides suggestions on ways to increase the score in the long term. So, in other words, a Mortgage Action Plan is not something you would use to prepare the borrower to do a rapid rescore to increase their credit score in 3 to 5 days, which is what the rapid rescore does. The Mortgage Action Plan is just another way for you to add value to the transaction by providing the borrower some goals for the long term so they can increase their credit score. If, for example, they're not planning on doing anything right now, maybe they're going to do it in 6 months, you can give them that type of a consultation. Now, all of this that we're doing here with the credit simulator, again, right, adding value to the transaction, but we're also preparing the borrower for a rapid rescore, right? Now, what exactly is a rapid rescore? A rapid rescore is a process whereby the new balances on the accounts are pushed to the credit bureau and updated within 3 to 5 days. Probably if you do a rush, it's 3 days. If you don't do it, or maybe less, a rush could be 1 to 3 days. The regular process, 3 to 5 days. So obviously, if you're in a loan, loan application comes in, credit report comes in, and you identify opportunities for the borrower to be able to qualify to get that 580 up to a 640, for example, or get that 550 up to a 580, so you can hopefully get and approve eligible for an FHA loan with 3.5% down, which requires a minimum of a 580. That's something you would do up front. Or if you get the unforeseen circumstance, like I mentioned, your income drops, DTI increases, now you don't qualify and you got to increase your credit score. The rapid rescore allows you to get the credit score updated within a short period of time so that hopefully the borrower can close. Now you got to understand there's 3 credit bureaus, right? TransUnion, Equifax, and Experian. They have different algorithms, so whatever change is done on one bureau isn't necessarily going to have the same result on another bureau. And it's really important to note that you only want to rescore the bureaus that need to be increased. You don't have to do all 3, right? So what do I mean by that? Okay, let's say, for example, you need at least a 660 credit score for a DSC, for let's say a non-QM loan to get a 80% LTV, but your borrower has a 640, a 655, and a 655. And 640 Equifax, 655 Experian, and 655 TransUnion. If you need a middle score of at least a 660, you're going to have to do the Equifax and the TransUnion. You're going to have to rescore both bureaus that are 655 so that your middle score ends up being at least a 660. You do nothing by rescoring just one of them to a 660. Now he's going to have a high score of a 660. And you do nothing by rescoring all 3 bureaus when you only need 2. And this is very important because the cost for a rapid rescore is anywhere between $40 to $50 per trade line per bureau. $40 more if you're doing the regular process, $50 if you're doing it as a rush. Now, this is important because let's say you have to rescore 3 credit cards or 4 credit cards, and that's 4 times 40, that's $160 for one bureau, right? If you do all 3 bureaus, that's $480, right? So, and maybe you didn't need to do them, or if you only need 2 bureaus, that's $320. So and this is really important because remember that the borrower can never pay for the cost of the rapid rescore. The rapid rescore is considered like a credit repair type function. So, that's something that can only be ordered by the lender. A borrower can never order one, and a borrower can never be asked to pay for it. As a matter of fact, if you go to our credit vendor and you input the borrower's credit card to pay for the rapid rescore, it's gonna deny it because you're gonna have to put the borrower's name as the owner of that card and all that kind of stuff. The system is gonna pick up, hey, that's our borrower. It's gonna let you know you can't charge the borrower, and it's gonna cancel the order. So remember, when you are looking at the potential for rapid rescore, remember that in the end, the full cost of the rapid rescore is going to be paid by the MLO. So if you are doing a rapid rescore, you better make sure that deal is a deal that can close, right? Don't do like a wishful thinking kind of a scenario, because you could find yourself $300, $400, $500 in the hole. I mean, if you're only rescoring 1 or 2 accounts in one bureau, that's not a really big deal. But I mean, I've had them where they get into the hundreds of dollars, and it's not a pleasant experience if the deal doesn't close and you're out that money. So remember, borrower can never pay for the cost. Now, for an automated underwriting approval to pick up any of the changes to the balances, to the score, to disputed accounts that are removed from the system, like for a conventional loan that you got downgrade to manual underwrite because you have disputed accounts, remember that the only way that DU is going to pick up the new score, the disputed accounts removed, the balance is lower, whatever it is that you need, or the payments lower, if it's a DTI issue, right, whatever it may be, the disputed account, all of the information needs to be updated via a rapid rescore. Disputed accounts removed via rapid rescore, account balances updated via rapid rescore, so you can get the new credit score to be picked up by a DU or LP, or to get the fact that that the accounts that were previously disputed are no longer disputed. Rapid rescore is the only way to get that done. So like I mentioned, it can take up to 5 days to complete. A rush fee can be paid to try to do it between 1 and 3 days. Now, be very careful. There is a no doc option, because to do the rapid rescore, the borrower has to pay down the balances if it's paying down a balance, and then has to request a letter from the credit company stating the new balance. The letter has to clearly identify the account holder, the account number has to be on their letterhead, and it has to state what the new balance is. They can fax it to them. They usually don't email, and if they send it through the mail, that's the least desired option. It's going to take 2 weeks to receive. So once you get that letter, then you're ready to order the rapid rescore to update the balance. Now, if the borrower says there's no way I can get that documentation, there is a no doc option, but with the no doc option, you run the risk of an extended review period of up to 30 days if they cannot quickly verify the information. Then they would go to the credit company for verification, and they have up to 30 days to provide a reply. So No doc is really not a preferred option. It's like a last resort if it's absolutely impossible to get the documentation. Um, and I already mentioned borrowers cannot order the rescore. And most importantly, now when you do pay for the rapid rescore, they will include for the cost of a new credit report that will need to be ordered so that you can obtain the new credit scores. That's the only way to get the new credit scores is for a new credit report to be generated. So very good tool here to differentiate yourself from the masses, from the application takers out there, and make sure you use it. It's already included in the services that we pay for. Are there any questions on credit simulations or rapid rescore? Okay, well, I'll give it another minute to see if anyone has any questions. But again, like remember, it is a very good tool to use, even if the rescore doesn't get completed. It's good to offer the credit simulation to the borrower. The cost of the service is already included in the credit report, and it will. If the borrower is shopping around for different loan quotes, and you're the only one that starts talking about how we can offer credit simulation to see what they can do, that may be the deciding factor for them to use you instead of everyone else who they may have spoken with, because everyone else is just trying to get a loan and you're actually trying to help them out. So I don't see any questions here. I hope everybody clearly understood that. And if not, please do reach out and we will provide additional details. Everybody have a great day.